Welcome back. This is Retirement News Online from our studios here in beautiful Scottsdale, Arizona. And today we're joined once again by Dolph Janis. He is the founder of Clear Income Strategies Group in Charlotte, North Carolina, to discuss a retirement strategy that many people may not know about, using an income annuity alongside life insurance. So the approach can help retirees create dependable lifetime income while also preserving a financial legacy for their loved ones. So on that topic, so a lot of people think, well, if I use an annuity, right, it's going to sort of cannibalize some of the money that I've got set aside for legacy. But talk about how using life insurance is a strategy that fixes that problem.
Well, life insurance is when you pass away. I hate talking about death. I always in the past, but it's a tax-free event that goes to the beneficiaries. Sure. A lot of clients are out there have 2 kids, 1 kid, 4 grandkids, whoever. A lot of different out there. And they've done very well for themselves, and they want to pass on that legacy to their kids. But they also need to survive. They also need to live life. Social Security is not going to pay enough for them, so they have to have their income and their brokerage accounts and however they're going to take it. So as we talked before, it's like, okay, you can take let's just use $1 million. I know it's a lot of money for some, but not for others. And you take the 4% rule, and you're taking out 4%, 40,000. That's what you need to live on. And you're like, well, how long am I going to live and how much am I going to be able to pass on to my beneficiaries by that? The question mark is nobody knows. Mm-hmm. As my wife says, the uncertainty is crazy. Now, with an income annuity, that same amount of money, you can get $60,000 a year versus $40,000. Now you got a buffer of $20,000. That's one hell of a life insurance, Scott. You can buy at $20,000 a year. You don't have to use the whole $20,000 a year, but depending on the way you set it up, and put $5,000 or $10,000 depending on the kid, you can leave them $1 million when you pass away in 20, 30 years. So instead of you worrying about you suffering your life and you not enjoying your life, and you're doing the old Frank Costanza, you want a piece of me kind of thing, you're like relaxed. Your blood pressure's not going up. And when have you ever seen Frank Costanza not like riled up?
Right.
He's always riled up. Mm-hmm. But if you could be calm, relaxed, and cool the whole time, knowing that the life insurance point is going to take care of your kids, your grandkids, and your family, that's a pretty good peace of mind. I'm sorry.
Many of you may not be aware that Dolph is a Seinfeld scholar.
No, nobody guesses.
Who is a good candidate for this? It sounds like there's a lot of people who'd be a good candidate for this.
I've had a lot of prospects in the last, since all this craziness has been happening in the world, worried about income, but they're like, I want to be able to leave. I've been hearing annuities are not going to leave enough money to my loved ones. And I know who's telling it to them. That's fine. That's their job to get their AUM money and get their fees from your pocket instead of going to the kid's pocket. But a lot of them aren't understanding the reality of it. Is they're not putting all your eggs in one basket. You're diversifying your portfolio. You're just taking that extra income to take care of your loved ones. Now, if you don't want your kids to get any of your legacy, that's your prerogative. But me as a father, I want to make sure my wife's taken care of. I want to make sure my daughter's taken care of. And people that I love are taken care of on the outside. Mm-hmm. That's who's a candidate for them. People that are in their 60s, going into their 70s, any ages above the age of 60 becomes a great candidate for this. Below 60, there's other ways to diversify it. Mm-hmm. But I think the target range is between 60 and 80 years old. They're the ones that could really use life insurance to take care of their loved ones without costing you any money out of your pocket.
And besides just the pure legacy question, what are some big misconceptions about this strategy overall? Because I think people on one have misconceptions about annuity products, certainly have misconceptions about life insurance. But today, they're both used in so many interesting ways to create retirement income. And some of it's tax-free. I mean, that's a tax thing, right?
There are life insurance policies out there that you can put money into, kind of like a Roth IRA on steroids. Yeah. It's going to have a heck of a death benefit, tax-free to the beneficiaries. And then you can take money out of that down the road, and that's tax-free to you in your retirement. That's not what we're going to talk about today, but there are more things in life insurance than to say, hey, you die, boom, you get this money. Mm-hmm. There's a lot more out there, and people hate insurance. I mean, I'm sick of insurance. I mean, you have a car?
Hell yeah.
You have a car insurance, right?
Of course.
Home insurance?
Sure.
Property insurance?
Oh, yeah.
Health insurance?
Yes.
So if you're, the important things in your life, your car, your loved ones, yourself, your property, your home, are all covered by who? An insurance company. Because, I mean, Scottsdale, it's a little warm out here. I mean, I think it was 114.
I think that's a misconception. It's beautiful year-round. It's like room temperature here all the time.
Oh, people I love it. I mean, it's a beautiful area.
So
but
why?
Back in North Carolina, we have tornadoes, from time to time. Hurricanes pop through. If your car gets destroyed by a hailstorm, or you get a lightning strike in your house or whatever, who's the first person you're going to call after things slow down? Insurance company. That's why you pay your premiums, to protect the things that you love. I love my family, so I'm going to use an insurance company to protect my family and the people I love. Can a bank, you give a bank money, are they going to protect the ones you love? Is a brokerage house, I'm not going to mention of them, are they going to protect the ones you love? Is Kmart, Target, are they going to take the ones you love? No. Go with the ones who are proven, who've been around for millions of years to do that.
You're transferring risk is what you're saying, right?
100%. You're taking all the risk off your plate and put it onto them.
Man, you make a lot of sense. You're really good at what you do.
I love what I do. I said, I'm going to be doing this until the day the Lord takes me.
Okay. And hopefully that's a long time. He's Dolph Janis in Charlotte, North Carolina, where it's humid. There's tornadoes, but here in Scottsdale, it's just hot. But we appreciate you watching. You can find out more at retirementnewsonline.com. Thanks for watching.